It's Rick for Monday, December the 5th. Some deterioration in the risk model, but nothing to panic over, although there was a lot of red today. Virtually all the sectors were red. The only thing that was up were pot stocks and the US dollar. And the strength in the US dollar is not good for the market, so they go inversely. And then most of my watch list and whatnot is all red. So, but I don't, not enough damage to cause concern yet. But we are at where the rubber is going to meet the road here in the next day or so, as we'll see in the charts. The S&P, pardon me, opened up nicely near the high and then just drifted lower all day long. And is now back below the 200-day moving average. And in fact, it's closed below the 8-day moving average, and the 8-day moving average has now started to curl over a little bit. So I'm hoping that we'll get some support here at the 21-day, and we still have the 50-day below us, which will provide some more support. So what I'd kind of like to see, if you're in the bullish camp, as I am, it'd be great actually if we gap down tomorrow right to the 396 area in the S&P, right around the 21-day moving average, and then go higher from there. That's one scenario. Or we drift down here and tighten up a little bit, and then don't test the 50, and then by later in the week come back up this way, and potentially even get through the 200-day moving average. So that's one scenario. Another might be what I don't want to see is something like this, where we come down tomorrow, we come down, we test the 50. Oops. We come down, we test this 50. I'm having trouble with my drawing tools here. And then go through it. Maybe stall here for a bit and then go through it and head down that way. That would not be a scenario that would be very pretty. But we have to prepare ourselves for anything that's going to come. So as always, I tend to be cautious. I did get stopped out of 3 positions today, all at break even or better. So I hate to see good profits get eaten away, but that's the nature of this market. Similar story for the QQQ. It's down 1.7% today. It's still significantly below the 200, but it is shaping up. If I were to draw, I love these downward trend lines, and over the next couple of days we could get back up through that. That would be quite bullish. You tend to find this is the first lower low here, a second lower low. We potentially could get a third lower low, and that's usually after 3 lower lows is when the institutions will step up and support a stock or potentially support the whole market. So the next couple of days could be interesting. We'll see. There's no major news, I don't think, expected the next couple of days. So volume was lightish today. It wasn't really heavy. So it could be another scenario I'm going to keep a close eye on. Really weak today was the small caps. They were down almost 3%. So again, you can see the weight of this 200-day moving average. I keep harping about it, but it's it's just a line on a chart, but virtually every institution, hedge fund, and all the big banks and money managers and whatnot, they pay attention to this stuff. And when stocks get up near that level, that's up, especially from up below, that's a time to sell. And then as it gets down, at some point they'll say, okay, that's enough, and then it'll come back up and they may sell again. And they won't be buying in earnest until we get above this area and we stay above this area. and then their models will say, okay, let's get more aggressive. So that's what we're waiting for too. We have to follow what the institutions are doing. We buying our 1,000 shares of this, that, or the next thing are not going to move the market. It's the big guys that are spending billions of dollars that are going to do it for us. We just have to follow in their footsteps. Toronto still down 1% today. Recall I did from last Thursday's video. Let's just go to the HXU. I did take this trade. Remember, this was Thursday last week. This was Friday. Yes. So I said if it opens in here, this trade would be worthwhile taking with a stop here and a stop here. I actually took this trade right on at the open. I could see it was gapping down. You can't see it in Toronto, but on the New York exchange was gapping down, and was showing some strength just before the opening. So I bought this right at the open, got a nice move intraday, but then it just crashed all day today. So I did put a stop and a quarter in my position here at break even to lessen my risk. And my stops are still where I said I was going to put them in my video last Thursday. So a stop on half here and a stop half here. I did the same thing with the SSO, except here I got a little more chicken. I bought right at the open. Actually, I bought just in the pre-market just before the open. Had a nice 2.5% move up. Things were looking very promising. So this morning I put my stop at break even. I just didn't want to lose on this trade, and sure enough, got stopped out, and we're going further. It's a little chicken because this stop should be, in theory, down here. But I just wasn't prepared to take that big of a loss. So if this actually does turn back up again, I've got a clear entry to get back into it over here. So I'd rather, out of safety, just get out of break even. So speaking about getting break even, my other open trades, this one was really disappointing. MGPI. I was in from down here. This was basically, I took a quarter of it off up here, and I had basically another $3,000 of unbooked profits, and it all got undone today. So I got stopped out at break even. That's an ominous looking bar. The SSO trade we just talked about. And then earlier I had the financials ETF. I got in down here, took a third of it off up here, and then stopped out at break even. So disappointing to see all these paper profits go, but that's just the nature of this market these days. There's just no follow through. We're still in that, what Mark Minervini calls a hard penny environment. So that was those. A couple remaining open positions are doing quite well, relatively speaking. REGN, I'm in from down here, 734. Had a nice day. Thursday, Friday were nice days. And today, actually, I drew a line. You can't see it. It's buried by the today's bar. But these lines are what I drew on Thursday night after trading on this day here, what I would like to see. And it's so far, it's only day one, but it's drawing out exactly the way I want to see it. I'd like to see these things tighten right up here. And then I will look to add to this position back around 762, and then possibly add even more again over 769. This pattern is getting to be picture perfect, provided it follows out just the way I've drawn it. If it keeps going down, I'm going to get stopped at break even. If it rips out tomorrow higher, at least I got a small position, a quarter position in this. Actually, no, I have a half. I'll participate in that. So, but ideally, this is what I want to see. And then end phase. Had a beautiful move on Friday and actually had a solid day today with the market down like basically 2%. This one just stayed flat. So this is very encouraging. I'm way down here at 306 or 307. I missed the add-on here at 324. And so it's not going to give me another chance, because if it comes back down into here, this is getting less interesting. So it's got to hold in here. It may come back to the top of the space, but I'd really like to see this just rip higher from here. So that's it for now. Not much for you all to do. If you took those index positions as I suggested on Thursday, fine, they're not doing anything wrong. However, let's go back to the SPY. Keep those stops in place. That stop has got to be for the S&P equivalent right here at 390. If it goes below that, it could head a lot worse. Minerini had a great comment this morning in his training session that every 50% decline starts with a 5% pullback. So think about that one for a few minutes, but basically that's why I have if something goes down 5%, I'm out of it, because you never know whether that's just the beginning of a potential 50% decline. So if you can't sell it at 5% down, odds are pretty good you're not going to sell it at 8% down. And then you're going to say, oh, it's going to come back, and then you get to be 10% down. You say, oh, I can't sell it then. It's going to come back. And before you know it, your original 5% little pullback is now down 50%. So I keep harping, same old theme, but it's all about risk management, having enough capital to continue to stay in the game. Okay, that's it for tonight. Cheers.